part A of the required, calculate the product cost per unit for both the executive chair and the classic chair. All right, so if we are calculating the product cost per unit, we are calculating the value of inventory per unit, because remember, all product costs are included in the value of inventory. So when we are performing this calculation, we are going to include all product costs, all right? And our product costs include direct material, direct labor, and manufacturing overheads. In terms of IAS 2, those are all of the costs that we are allowed to include in the value of inventory. And because OCS uses absorption costing, we are going to include both variable and fixed manufacturing overheads in this calculation. All right, so let's have a look at the calculation. So if we go back to the information provided in the scenario, first for the executive chair, we have leather, which is a direct material cost. And in addition to that, we also have delivery fees and non-refundable import duties. And remember, we said in terms of IAS 2, we know that the delivery fees and the non-refundable import duties need to be included in the value of inventory. So we know that leather is imported in batches of 800 square meters, and the total cost is 1.4 million rand per order. And then in addition to that, we have the delivery fees and non-refundable import duties, which amount to 280,000 rand per order. So let's calculate what the total cost is for an order of 800 square meters. We can then divide by 800 square meters to get the cost per square meter. And we know that each chair requires 2 square meters of leather. So we can then just multiply that by 2 to get the direct material cost per unit. All right, so we're going to have to look at some separate calculations over here. All right, so 800 square meters of leather costs 1.4 million rand. So that's for one order. In addition to that, we have delivery fees of 280,000 rand. So that must be included in the value of inventory. So that gives us a total cost of 1.68 million. And now remember, guys, that is for 800 square meters. So we need the cost per square meter. We don't want the total cost for 800 square meters. We are trying to calculate the product cost per unit for each of these products. So we need to divide that by 800 square meters to get the cost per square meter. So it's 2,100 rand per square meter. And we know, once again, guys, we don't want the cost per square meter. We are trying to calculate the product cost per unit. So we need to know what the cost is per unit. So we need to multiply this by 2 meters because we know each executive chair requires 2 meters of leather. So multiply that by 2 meters so that you can get the cost per unit. So it's going to be 4,200 rand per unit. Okay, remember to always clearly reference to your calculations. Then for the classic chair, we know that it's upholstered in fabric, and we know that each chair requires 1.5 square meters of fabric, and the cost is 500 rand per square meter. So once again, guys, we don't want the cost per square meter. We are trying to calculate the cost per unit. So we are going to take 500 rand per square meter, multiply that by 1.5 square meters per unit, because we know each unit needs 1.5 square meters, and that will then give us the unit cost. So the cost of fabric is 500 Rand per square meter. We know that each chair requires 1.5 meters. So that gives us a unit cost of 750 Rand. All right, then next we have other direct material costs. So you can see what I'm doing, guys. When we read through the information provided in the scenario, we already identified all of our product costs. So now I'm just going and I'm pulling out all of those product costs so that I can calculate the product cost per unit. So we've already taken into account the leather. We've also included the delivery fees and non-refundable import duties in that calculation. We've taken into account the cost of the fabric for the classic chair. Then we now need to take into account the other direct material costs, and this is easy because you've been given the unit cost, so there's no calculation required over here. For a single executive chair, the cost is 1,200 Rand, and it is 750 Rand for a single classic chair. So these are other direct material costs. All right, then we have direct labor, which is also a product cost, so we also need to include that in our calculation. Now, for labor, guys, you've been given the rate per hour. So once again, we don't want the rate per hour. We are going to need to convert that into a cost per unit. We are trying to calculate the product cost per unit. So you have been given the number of labor minutes per chair. So to make an executive chair, it requires 210 minutes. And a classic chair requires 150 minutes. Now just be careful, guys. The way the information has been provided is inconsistent. You've been given the labor rate per hour, but you've been given the number of minutes for each chair. So you can't take the rate per hour and multiply it by the number of minutes. Either everything needs to be in minutes or everything needs to be in hours. You need to be consistent in the calculation. So the easiest way to do this is we are going to convert the minutes into hours. So we know there are 60 minutes in an hour, so we are going to say 210 divided by 60 in order to calculate the number of hours per unit. And we'll do the same thing for the classic chair, 150 minutes divided by 60 to get the number of hours. Once we have the number of hours, we can then multiply by the rate per hour. We are then being consistent in our calculation. All right, so an executive chair requires 210 minutes and a classic chair requires 150 minutes. So divide that by 60 because we know that there are 60 minutes in an hour in order to calculate the number of hours per unit. So for the executive chair, it's 3.5 hours per unit. And for the classic chair, it is 2.5 hours per unit. All right, and now that we have the number of hours per unit, we can just multiply by the labor rate per hour in order to get the unit cost. Alright guys, now I'm going to calculate a subtotal over here because if we need to calculate the selling price, we need the prime cost because we know that the selling price is calculated based on a 60% markup on prime cost. So Either way, at some point, we are going to need to know what the prime cost is. And remember, your prime cost is the sum of your direct material and direct labor costs. So we are going to calculate a subtotal over here, which will give us the prime cost. All right, and then don't be like me. Remember to always reference your calculations. All right, then next we have the total annual manufacturing overhead cost excluding depreciation. We were given depreciation separately. So remember, guys, we said we're going to have to use the high-low method to split this cost into its fixed and variable portions. And both of these are going to be product costs, which we need to include in the product cost per unit. So first, let's use the high-low method to split this cost into the fixed and variable portions, and then we'll look at including the costs in the calculation of our product cost per unit. So remember, you are just going to pull out the high machine hours with the corresponding cost and the low machine hours with the corresponding cost. Then you calculate the difference in cost and the difference in machine hours. So the difference in cost is 192,000 Rand, and the difference in machine hours is 3,200 machine hours. We then calculate the variable manufacturing overhead by taking the difference in the cost and dividing by the difference in machine hours. Now, just be careful, guys. Because you are not dividing by the difference in units, this can't give you the variable manufacturing overhead per unit. We are dividing by the difference in machine hours, which means this is going to give me a rate per machine hour. So this is not 60 Rand per unit, this is 60 Rand per machine hour. And we need the product cost per unit. So we need to take this rate per machine hour, multiply it by the number of machine hours per unit, so that we can get the variable manufacturing overhead per unit for each product. Now, you were given that information. If we go back to the scenario, we know that an executive chair requires 5 machine hours to manufacture, while a classic chair requires 4 machine hours to manufacture. All right, so it's 60 Rand per machine hour, and it takes 5 machine hours to produce 1 executive chair. So that gives us a unit cost of 300 Rand. And for the classic chair, 60 Rand per machine hour, and it takes 4 machine hours to produce 1 unit, giving us a unit cost of 240 Rand. So we can then include that in the calculation of our product cost per unit. Then lastly, we just need to calculate the fixed manufacturing overhead cost per unit for each product. And we need to also include fixed manufacturing overheads in this calculation because the company uses absorption costing. So if we go back to our calculations over here, we know what the total cost is, guys. And remember, you can either perform this calculation using the high or the low information. Either way, you'll come to exactly the same answer. So I'm going to use the high information. We know what the total cost is. That includes a fixed and a variable portion. We've calculated what the variable cost is. It's 60 Rand per machine hour. So if we take the total cost over here and we deduct the variable portion, we'll be left with the fixed portion. So the total cost is 3,392,000. Take out the variable portion, which is 60 Rand per machine hour, as per our previous calculation. And because we are using the high cost, you need to use the high number of machine hours to calculate that variable cost in total. So take the total cost, deduct the variable portion, and you'll be left with the fixed portion. So like I said, you can also perform this calculation using the low information, where you'll take the total cost. However, then when you deduct the variable portion, you'll say 60 Rand per machine hour multiplied by 23,000 machine hours. So just be consistent in your calculation, and then regardless of whether you use the high or the low, you will come to exactly the same answer. Now, it's important to note that this fixed manufacturing overhead excludes depreciation. So this excludes depreciation. So please remember, guys, we still need to take the depreciation into account because the depreciation is also a product cost, and it's also a fixed cost. So we're going to add together both of these fixed costs. These are then the only fixed product costs that we have, because after this we were given information about admin costs and selling costs. But remember, those are not product costs, those are period costs, so we won't include them in this calculation. So the only two fixed product costs we have is the overhead, which excludes depreciation, and the depreciation. So we need to add both of those together. And then remember, guys, in terms of IAS 2, we need to calculate an allocation rate. And that allocation rate is always based on normal capacity. So we are going to take the total budgeted fixed overhead, which is the cost that we've just calculated now, excluding depreciation, plus the depreciation, so the total fixed product costs, divide that by normal capacity, which is 28,000 machine hours, and that's going to give us our allocation rate. Okay, so just be careful, this excludes depreciation. But we know depreciation is a product cost, so we also need to include depreciation in the calculation. So we need to just add depreciation. Then, in order to calculate the product cost per unit, we need to calculate the allocation rate, where we take this total budgeted cost and we divide by normal capacity, which is 28,000 machine hours. And because we are dividing by machine hours, this is not going to give us an allocation rate per unit, it's going to give us an allocation rate per machine hour. So once again, we need to multiply this by the machine hours required per unit for each product to calculate the unit cost. We want this allocation rate per unit. We don't want the rate per machine hour. We are trying to calculate the product cost per unit. All right, so we performed a very similar calculation above when we looked at the variable manufacturing overhead, because we took the rate per machine hour, we multiplied by the number of machine hours per unit to get the cost per unit. So we're doing exactly the same thing over here now. Obviously, we are just using the fixed overhead allocation rate and not the variable rate. So we are using a rate of 74 Rand per machine hour. An executive chair takes 5 machine hours to produce, and a classic chair takes 4 machine hours to produce. So we can then calculate the product cost per unit for each of these products. We have then taken into account all product costs, so we can now calculate a total over here. All right, and that then answers part A of the required.